I'm James Turk. I'm a director of the GoldMoney Foundation, and it's my real pleasure to be here today in Jersey, Channel Islands, with my friend John Embry, Chief Investment Strategist of Sprott Asset Management. John, it's a pleasure to see you here, and I really appreciate you taking the time out to meet with us.
Well, it's wonderful to see you again, James. I'm looking forward to our conversation.
Yeah, it's been a while since we've had a chance to talk about markets, but let's get right into it. Silver, that's the topic of conversation at the moment. What are your thoughts on what's been going on here?
Well, I think the rise to the sort of nearly $50 recent peak, believe it or not, was justified. And it's funny, when you read the mainstream press, everybody's talking about bubbles and how big the correction is going to be. And they don't seem to understand the fundamentals. Yeah, I think the fundamentals for silver are impeccable. The fact we're going through a tough correction here is not surprising. This is a paper-driven, COMEX-sponsored correction. And it's to be expected. I mean, if you've been involved in the silver markets as long as we have at Sprott, we're used to these things. They're not fun, but they're just another buying opportunity.
Yeah, one of the things that I've been trying to make clear is that there's a difference between the physical market and the paper market. And sometimes the paper market can drive prices to a certain extent because there's so much paper out there relative to the amount of physical. And it can drive it to the upside to a certain extent and to the downside to a certain extent. Is that what you see happening now, the paper market driving it because of people bailing out of leveraged positions?
Yeah, I would go so far as to say the paper market probably drives the price most of the time. When the physical market takes over is when the physical shortage of significant dimensions takes place. And what's going on right now is very clearly there's massive short positions in the paper market. These positions are being protected. And in the short run, they have a lot of power. They can move the market a long way, as we've seen. We've seen a 20% plus correction from the highs, a week ago?
Yeah.
But this is not atypical, and I don't think people should be deeply concerned about it. They should be actually thankful if they don't own silver because they're getting another opportunity to buy some.
Yeah, one of the things I've been recommending is the continuing accumulation, month in, month out. Whenever your budget allows, just continue buying regardless of the price, because in the long run, the trend is much higher, and by accumulating in that kind of cost averaging program, a few years from now, you're going to look back and be very happy. Would you agree with that?
I think it's a brilliant strategy. I've actually done that myself in gold and silver for years. Mm-hmm. Whenever I have free cash flow, I put it in. I don't worry about the price because I believe the trend is established, and it has been for over 10 years. And it's certainly what people can't grasp, all these talking about bubbles, is we're in the early stages of a massive move in the precious metals. And what we've seen to date is actually quite restrained and orderly. It will become disorderly on the upside.
Yeah. One of the things that I've been focusing on since January, and actually even a little bit before, was the interest rates on the precious metals and whether they're going to go into backwardation. And in fact, silver did go into backwardation in January. And if you look at the spot price relative to the December 2015 price on silver, we've been in backwardation ever since then. Have you ever seen anything like that before?
No, I haven't. And I think what it is indicative of is what we were mentioning briefly before, and this is the physical shortage. I mean, there's a massive amounts of paper silver out there. But because of the mounting physical shortage, people are having to pay up for the physical. And that's creating this distortion in the paper market where you've got backwardation. I think it's an extremely bullish signal going forward.
It's also an indication that the ARBs, the arbitrageurs, don't have the silver to actually borrow to sell spot and buy back in the future.
Absolutely, and that just is another manifestation of the physical shortage.
Which is also obviously another bullish indication about the silver market as well.
Absolutely.
Well, let's move from silver onto gold. Over the past year, the ratio's dropped, the gold-silver ratio, the number of ounces of silver to buy an ounce of gold, has dropped from about 65 or so to as low as around 31, 32. We've bounced back up a little bit. We're still in the 30s. What's your thoughts here? Is the ratio going to continue to fall?
Well, that's our belief at Sprott. I mean, my partner Eric Sprott is particularly strong in this point. He thinks that we will go back to the historical lows, which have been like 10 to 15 times. I mean, the fact we've gone as quickly as we have from in the 60s into the 30s, one shouldn't be surprised at a correction. I mean, nothing goes in a straight line. Mm-hmm. And in this field, as you know, the corrections tend to be violent. And we're in the midst of a violent correction. But no, that doesn't affect the longer term direction, which I think probably is towards the historic lows. I think gold's going up a lot. Silver's just going up more. And it is manifestation of it's a greater physical shortage of silver in the world than there is gold.
From here going forward, over the next couple of months. Will silver climb more rapidly than gold in your view, or is it hard to say?
I would say yes, once the correction is over. Like one thing I've learned from hard experience is you don't call bottoms in these short-term corrections. They can go far further than you think, rationally. But once that's behind us, yeah, I would think silver would reestablish its preeminence in terms of upside potential.
I guess the extent of the correction is sort of a reflection of the amount of leverage that was used on the way up.
I guess it is. You know, the fact is, I always marvel at these people that get cleaned out on COMEX because, I mean, you can see these things coming. I mean, there was the confidence index, which had silver up 96% confidence, however they measure this. And I mean, traditionally, that's been a very big red flag. If you're long paper silver when this confidence stays at 95, 96% for weeks, you are probably going to get hurt. And this is exactly what we've seen.
If you're trading paper.
If you're trading paper. If you're trading silver that's paid for, physical silver, you just go,